We are all well aware that China is in a slowdown, but it's very interesting that the CCP or their government leaders there are not sweating it. And that's what we're going to cover in this video. So guys, smash that like button, subscribe if you're new, and of course, drop a meow in that chat. You're watching More Money. Let's get it. What's up guys, and welcome back to the channel. This one's very interesting. So it's very clear that China's leaders are not sweating a growth slowdown. And that is a huge shift from previous downturns when Beijing unleashed aggressive stimulus to prop up growth. And how does that really impact my expectations? Well, when they originally issued their 5.5% GDP growth guidance earlier this year, the number one main assumption that I made is that they're going to do what they did in previous years and stimulate the economy to achieve that 5.5% growth target. But now it seems like they're not going to go after that growth target, and they're just going to let the chips fall where they land. The Wall Street Journal dives into this with a little bit more, and along the lines of exactly what I was saying. With a slowing Chinese economy, there looks to be no new fiscal stimulus to juice up growth. And at the same time, there seems to be no letup in a regulatory campaign that has plummeted the all-important property market. And so instead of trying to achieve that 5.5% growth, it looks like the senior leaders have effectively dropped their official growth target for the year, which is very dissimilar from the 2008 global financial crisis. And now it looks like very few economists expect stimulus measures from Beijing. So what that means is, if you read through it, it means that very few economists expect the Chinese economy to grow at 5.5% this year. And you know, I've been throwing around that 5.5% number, but just recall that this was the target that was set earlier this year. And at the time when this target was made, it seemed like a very low number. In fact, it was their lowest level in more than a quarter century, so 25 years of economic planning, which reflected the domestic and global uncertainties. And there was a lot of us at the time who did believe that that 5.5% might have been a little bit too low. And if they really needed to, they could juice the economy with sort of stimulus. But it looks like they're going to even come under that. So it's crazy how quickly the story is changing here on China. And just a little bit more from those meetings, notice that they only made one reference to common prosperity. So I do believe that common prosperity is largely gone, and a lot of people who focus on reporting on Chinese economics are also saying the same. The other thing is that they did not mention a property tax after the government said in October of last year, of 2021, that it would conduct 5-year property tax trials. I personally wanted a property tax because that's your only way out of this property situation. Otherwise, what's going to happen is that local governments, because they don't have access to property tax revenues, they have to sell land leases and continue to sell land leases to generate revenues to cover their costs. And all that does is exacerbates the problem and makes it even worse down the road. So you do need to fix this. Doesn't look like that's going to happen in 2022. Now, the other thing is that China said that it's going to improve measures to encourage families to have more babies after loosening restrictions last year. But the reason why they said that is because I said on this channel, even last year when I did my Alibaba 7-part initial series, is that the Chinese population is expected to begin declining in the second half of this decade. But they were short of details on the exact measures that they're going to utilize to sort of increase the Chinese population. But I think one of the things that you can do is, look, Tesla already produces in China. Just give them more credits or incentives to make it so that Elon Musk actually operates out of China, his personal office, and then just let him loose. He'll populate half the country. So problem solved. Now, most economists actually welcome Beijing's increasing restraint. However, I do have to say that this could actually go the wrong way. So be careful with not putting any stimulus into the economy. But there's a huge risk emerging for China that's getting worse. And I actually talked about this in my 4-part series that I released on the Chinese property sector, and I want to talk about it right now. Miss Wang of ANZ Securities worries that Beijing does not have a clear rescue plan for the property market, and she argues that if there are policy measures. They should be introduced as soon as possible, given all the challenges that are facing the Chinese economy. And those are my thoughts exactly. Right now, what they're doing is their effective federal government is pushing it on the local governments to solve their property woes. But what they really need is a property tax. And I think that gets started from the top. I don't know how they would sort of roll that out. But the other issue is that this is a cultural issue in China as well. People are not used to paying property tax. So good luck trying to even start that. If you could, it would probably wreck the property market even more by pushing down prices. You guys already see the states that have the highest property taxes, or the municipalities that do have the highest rates of property tax, generally have the lowest price levels for homes as well. And so you could really see that happen in China, where even like a basis point implementation of property tax in a particular municipality could potentially crash the property sector in that area. Now, with all these challenges, where exactly does Alibaba sit in terms of overall opportunities that the Patreons have access to? Well, you can see at the moment, Alibaba is number one in terms of the cheapest in terms of share price as a percentage of intrinsic value, sitting at 29.7%. And notice that that's above a couple of other interesting opportunities right now, where you have Meta trading at around 60% of their intrinsic value, and Sprouts Farmers Market, a name that I have covered on this channel before, trading at approximately 64% of their intrinsic value. Now, how do you get access to unlock this whole list and get access to all of those individual models that accompany all of these names on the tracker? Well, you can get access to all those models at the lower tier of the Patreons. And I did mention earlier in this video where I talked about the property sector crisis in a 4-part series. And I'm going to link to that series right here, because I think it's very important that you take a look at what's going on and analyze it as a risk before you invest in China.